Welcome. You're watching Wealth Creators on Money 9. I'm Sakshi Batra, and on this show, we talk about those stocks which have given extraordinary returns to investors in the past. So, this is where your search for multi-bagger stocks really ends right here, because joining in is my colleague right in Harsh Chauhan joins in from Mumbai. He's working from home, and he will be sharing with us one such stock which has given robust returns to investors. So, Harsh, what do you have for us today?
Thanks, Sakshi. The stock on my radar today is a household name and a top pick of seasoned investor Dolly Khanna, Butterfly Gandhimathi. Now, this company is a manufacturer of household appliances, domestic appliances like LPG stoves, mixer grinders, tabletop wet grinders, pressure cookers, non-stick pans, steam iron, and washing machine, and many other products. Now, this company is a market leader and holds number one position when it comes to stainless steel gas stoves as well as tabletop wet grinders. Apart from that, the company has a vast distribution network of over 500 exclusive distributors spread across 29 states of India and is among the top three domestic home appliance company. And this company also holds a cash balance of around 5 crores in its book. So that's how this company is fundamentally strong as well as a wide reach and strong product base.
Absolutely. Butterfly Gandhimathi, this is a stock that has been in news because of its recent earnings as well, and how the stock really outperformed the markets, its segment right after the Q4 earnings. We'll talk about that as well. But first, help us understand, looking at the past data and comparing with the benchmark indices or its peers as well, how has Butterfly Gandhimathi really performed, and what kind of returns have we seen from this stock?
So, Sakshi, the returns have been phenomenal. Like over the last 1 year, the stock went down to 108 rupees due to the COVID-induced sell-off in the market. Now, as the market sentiment improved, this stock started its rally and has now is quoting somewhere around 847 rupees. Now, if you have invested 15,000 rupees in this stock, over the 1 year, it has grown to 1,17,000. That's approximately 684 returns this stock has given. Now, if we compare the returns with the benchmark index Sensex or BSE small cap index, the returns has been huge. This stock has rallied almost 8 times from its 2020 lows, whereas the BSE Sensex has given almost 1.6 times the returns, and the BSE small cap index is around 2.2 times. So there is a vast outperformance of this stock, and this can be noted from this blue line that is there, which has seen a sharp uprise in the price. That is Butterfly Gandhimathi's stock price trend. Whereas the green line is for Whereas the green line is for BSE small cap index and the red line is for BSE Sensex. So that's the outperformance this stock has given.
Absolutely, and it's been a one-way rise and a sharp up move there, a huge contrast to both the benchmark and the small cap indices. If you see the Sensex and the small cap indices, there's a vast difference out there, 684% kind of a rise for this stock from low three-digit numbers. It has actually risen to high three-digit numbers in just a short span of time, and you can clearly see for yourselves the marked difference that the graph has really shown when you talk about Butterfly Gandhimathi and the benchmark Sensex. Despite the fact that the Sensex has also given over 1 time of return, this stock has clearly given over 8x returns in this duration. Congratulations to you, Harsh, for picking this out, this excellent research. Help us understand a little bit more. What are the factors which have really helped this stock rise? What have been the fundamentals, and any kind of performances that you could highlight, maybe from Q4 and the past year's performances as well?
So, Sakshi, the rally has been backed by a very strong performance on the financial front. Now, if you look at the Q4 FY21 performance, the revenues of this company has grown almost 86% to rupees 207 crores from 110 crores in the same quarter last year. Whereas it has reported a PAT of 9 crores compared to a loss of 8 crores in the last year. So that is just Q4 performance. But on the annual basis, the performance is even much stronger. Like the revenues have grown 28% to 870 crores from 680 odd crores. But the bottom line jump is huge. From a mere 3.3 crore rupees profit it has jumped to 36.7 crores. So that's the kind of performance this company has delivered over the past 1 year. Now, this performance is backed by a strong operating and working capital management. One of the prime reasons for revenue growth has been the preference of home cooked food because people were locked in their homes. So people had started buying various home appliances to help
I
them
want
in
to
their
know from
home.
you, Harsh, did you learn cooking and did you cook a lot of food during this lockdown
Yeah,
as well?
I use the non-stick pan and I try to make dosas because that is
Okay.
the easiest part. Non-stick pan doesn't like you can easily remove it.
All
So
right. We need to try that soon after we also come back to office once the pandemic is over as well. Please go ahead with your numbers that you
sure.
were sharing.
So apart from huge demand from customers due to staying home and home cooked preference, the company on the operational front has done a lot of changes, especially in the working capital and has reduced the debtor days. That is basically the time in which after selling a goods, the money come to the company. That has been reduced from 102 days to 37 days. And this has been done by implementing or adopting real-time inventory tracking and bill discounting facilities by the company. And all these have led to reduction in short-term borrowings to 0 rupees compared to 126 crore in FY20. So that's the kind of changes this company was able to show even in a pandemic hit year, and which is why the stock price is showing that kind of a rally.
Absolutely. These fundamentals, the financial performance, all of this is completely adding up to the kind of performance that we have seen here. But what I'm sure most of the viewers right now must be feeling is a huge, huge FOMO for a for a stock that was priced just about 100 rupees, which is in the budget of so many people who would want to invest. This could have been a real multi-bagger, just about a 15,000 rupees turning to over a lakh and a half almost. So that is something that all the investors are looking out for. All those investors looking to add this stock to their portfolio now, can they do that? That's the big question that they must be asking. So help us understand, what are the top brokerage houses really saying? Is this stock really going to outperform going forward from here?
Yeah, so as far as the rally, the stock has seen a phenomenal rally, so one has to think before entering. But brokerage houses are very bullish on this stock, and ICICI Securities has a target price of 1,000 rupees for this stock, implying 18% upside from the current levels. Now, why the brokerage houses bullish on this stock is primarily because the return on equity has expanded to 16% on the back of efficient working capital and operating performance that the company has brought in the last financial year, and it is going to stay there over the coming years. Apart from that, the company is planning of capex of rupees 30 crores and increase its production capacity, which will unleash the potential of garnering revenues to 1400 crores. And apart from that, ICICI Security believes that the revenue growth trajectory will be 17% over the next 2 years with the EBITDA margin of 11%, which is huge for a small company like this. And that is why they are anticipating that this stock can go up to 1,000 rupees in the near term.
Absolutely. The capex is going to unlock the revenue potential from here on as well. And there is going to be sharp upside that we can expect from here. ICICI Securities definitely has this target of 1,000 rupees. So still an upside of almost 80 odd percent right there. Harsha, I'm told that we also have a live question right in here. So let's take that as well. Rohit wants to know that is there still steam left in this stock? So we were just talking about that, Rohit. If you could help us understand a little more, what Rohit is actually wanting to know is that whether he should also buy this stock right now.
So the steam is surely left because the small cap and mid cap rally is going to sustain for next couple of months at least, or a quarter, because your Q1 financial numbers are going to be better than compared to your Q1 financial numbers of FY21. So which is why the rally in small and mid caps is going to be there. And as far as this stock is concerned, the kind of operational efficiency the company has brought in, I'm sure the numbers are going to more and more surprise us on the upside. So one can
Okay.
still buy with but the risk reward ratio is also to be calculated, and
Sure.
it's after the rally, it's a bit risky stock, but one can enter with a stop loss.
Absolutely, absolutely. Hope that addresses your query also, Rohit. Thank you very much, Harsh. for bringing this deep research on this stock and helping us understand how these kitchen appliances and home appliances stocks also have really outperformed in this last 1.5 years during the pandemic, and what kind of opportunities lies there right in front of us as we move into unlocking after the second wave of the pandemic has hit us as well. So with that, we wrap up this edition for you, but a whole lot of action remains on the other side. So stay tuned with us on Money9.com.